Hey, what's up, everyone? So, did you know that most Wall Street fund managers cannot even beat the S&P 500? That's true. They are very well paid, and most of the hedge fund managers cannot beat the S&P 500. You know why? Because it's very, very hard or almost really impossible to time the market. Have you heard time in the market beats timing the market? It's almost impossible to understand when is exactly the bottom and when is the top. And if you try to time the market, most likely you will not be able to do it because you'll never be able to identify when the bottom is the bottom, and you will never be able to identify when the top is the top. I always have this group of friends that every time the Bitcoin price is going up like crazy, they text me to have dinner or to have a beer because they want to learn how to buy Bitcoin. No, that's too late already, okay? It's in times like these that you should be dollar cost averaging and you should be buying Bitcoin. It's when Bitcoin is at $20,000, not when Bitcoin is like $50 or $60,000, you are going to text me asking how to buy Bitcoin. Okay, but I'm not saying that this is the bottom of the Bitcoin price or whatever crypto you are talking about. And the fact is that no one knows. So if you have a sum of money, should you invest it all straight away in the market, in the stock market, or in crypto, or in Bitcoin, or whatever? Or should you divide it and invest over time? Well, today I'm going to show you the exact strategy, the best strategy to maximize your investment. In this case, I'm going to show you a few different DCA dollar cost averaging strategies that are going to maximize your investments. And I'm going to show you if it is better to dollar cost average daily, weekly, monthly, or use a special strategy that I will show you in this video. So keep watching and I will show you the best dollar cost averaging strategy, and it's not daily, weekly, or monthly. By the way, if you enjoyed the video, give it a like and subscribe to my channel. It will really help. Okay, but before I show you the Excel that I have prepared for this video, why dollar cost averaging? Well, because it's very hard or really impossible to time the market. Nobody knows when is the bottom, nobody knows when is the top. All these experts are trying to predict when is the time to buy and the time to sell, and most of the times they never get it right. And it's also very risky to invest a lump sum. Let's say if you have $100,000 now, would you buy $100,000 worth of Bitcoin or Tesla stock or whatever? Well, that's very risky because although Bitcoin is around $20,000, it could go to 15 or it could go to 10. And if you put all your money all in, you are incurring very high risks. But what if you invest this $100,000 over time and you invest a little bit every day or every week? That would reduce a lot the risk. And for me, the most important is peace of mind. Because if I put suddenly a lot of money in the market, I cannot even sleep well, or if Bitcoin price goes down 5 or 10%, or Tesla stock goes down 10%, I'm going to be, oh, fuck. Again, like, oh, I'm down already, these $1,000. It's not good for your mental health. However, if you do the dollar cost averaging strategy, it doesn't matter. I don't care if the market goes up or down. If it goes down, good. I buy it tomorrow with a discount. If it goes up, yeah, good. I'm making money. But if it goes down, I really don't care because I see the market going down, the price is dropping 10%. For me, it's good because I'm buying at a discount. And if you believe in the asset that you are buying, if you believe in Bitcoin, you believe in Ether, you believe in Tesla or Apple stock because you believe in these companies, you still believe it. If the price goes down 10%, you should believe it even more, right? So in this video, I'm going to show you how to do the right dollar cost averaging to maximize your profit. I made all the calculations and I basically calculated dollar cost averaging Bitcoin. In this case, it could be any asset, but I tested manually dollar cost averaging Bitcoin since August 2018 until now. So we have here 4 years of market. So this is to backtest as if you bought Bitcoin since 2018, since August 2018 for 4 years, you bought consistently Bitcoin. And I made a few tests. I made daily dollar cost averaging. What if you buy $10 worth of Bitcoin every day? Weekly dollar cost averaging. What if you buy $70 worth of Bitcoin every week? Then we have the monthly dollar cost averaging. What if you buy $300 every month? And let me stop here. Which one do you think works best? Is it the daily strategy? Buy every day, buy every week, or buying every month? Let me know in the comments section which one would you think that is the best strategy. I will show you in a minute. And then I made two other strategies, very interesting. So I tested this strategy where you start dollar cost average every time the simple moving average 50 goes below the simple moving average 200. So every time this red line goes below the green line, I start buying, right? So you have, let me put it like this. In blue, you have the Bitcoin price. And every time the red line goes below the green line, I start buying Bitcoin. So I bought here during this phase, then stop here, buy again here, stop, buy again, stop, it's going up a lot, buy again here, stop here, stop, and start buying again here. And I'm going to show you also the result of this strategy. In this simple moving average 200, where you start buying every time the moving average 50 goes below the 200, I made two different tests. One, what if you buy $10? And the other, what if you buy $50 worth of Bitcoin once these moving averages cross? And the results are really unexpected. Let's take a look at them. So as you can see here, daily dollar cost average, if you buy for 4 years Bitcoin every day $10, you will have a return of 83%. Weekly dollar cost averaging, 83% also. And monthly dollar cost averaging, 82%. So as you see, if you are looking at being a long-term investor, it doesn't matter if you buy daily, weekly, or monthly, as long as you are buying consistently. So it doesn't matter if you are buying daily, weekly, or monthly if we are looking at the long term. Personally, my favorite dollar cost averaging, it has been daily. If you have like a Binance account, you can do the auto invest and you don't need to worry. It's such a peace of mind. You can do dollar cost averaging, buying $5 or $10 or $50 every day or every week or every month. But as you see here, if you are thinking about the long term, it doesn't really matter to do daily, monthly, or weekly. But when it comes to the simple moving average 200 strategy that I was showing you, the results are very different. So in this simple moving average 200 DCA, I invest $10 every time the red line goes under the green line, and it gave me 132% return. But if you do an aggressive, I call it aggressive SMA 200 DCA, where you buy $50 worth of Bitcoin whenever the line goes below the other, it gives you a return of 175% over these 4 years. And remember, at the moment, Bitcoin is at $20,000. Bitcoin was already at $60,000 in the past, right? Over a year ago, the Bitcoin price went all the way up to 60,000 and go down from 60,000 to 20,000 now, and you will still have a profit of 175%. So if you have invested in this strategy, you will have invested $32,000, and the Bitcoin that you have now will be worth $88,000. So it will be a profit of $56,000 despite the huge bear market that we are suffering. So as you see, this strategy really helps you controlling the risk, because if you buy Bitcoin 40,000, 50,000, 60,000, you will at the moment be in a huge loss. But if you just buy dollar cost averaging, you're just buying all the time. Or if you buy whenever this chart over here tells you to buy. So if you start to buy whenever the moving average 50 goes below the moving average 200, you have huge opportunities. And as you can see, at the moment, you should be dollar cost averaging. And I'm dollar cost averaging for sure. So if you buy a little bit of Bitcoin or Ether or whatever is the asset that you like to buy every week or every month or every day, or for the period of time when this red line is under the green line, the moving average 50 is below the moving average 200, you will for sure be okay in the long term. And remember, this is always considering that you are a long-term investor. This is not for traders. Trading sucks, and traders most likely are not going to have the results that we are seeing here, because trading, buying and selling and trying to time the market is extremely hard. So again, this is not financial advice, but according to the statistics, according to the numbers, if you follow these, you will be okay in the long term. Of course, if I start to dollar cost averaging now and tomorrow the Bitcoin price goes to $15,000, I'm going to be at the loss. But I will continue to dollar cost average until the Bitcoin price or whatever is the asset recovers, and I'm happy and I sleep okay at night because I don't need to trade. I don't need to care if the Bitcoin price goes up or down. All right, my friends. That's all for this video today. If you like, give it a like and subscribe to my channel. It will really help. And as always, I will see you tomorrow.